2 years ago on April 5th, I had £4,000 sitting in an easy access savings account. I knew the tax year was ending. I kept meaning to move it into my ISA and then life got in the way. At midnight on the 5th, that allowance was gone. I couldn't carry it over, I couldn't claim it back, it just vanished. If you don't want to make the same mistake, this video is for you. April 5th is the last day of the UK tax year. After that date, 3 really valuable allowances reset and anything you haven't used gone forever. I'm going to walk you through the 3 most impactful things you can do in the next few weeks. These aren't complicated. You don't need a financial advisor, you just need to act before the deadline. Let's go. Number 1. Use your ISA allowance. Every adult in the UK gets £20,000 ISA allowance each tax year. That's £20,000 you can put it into savings or investment account where the interest, dividends and growth are completely tax-free. Not tax deferred, tax-free forever. The catch? If you don't use it by the April 5th, it disappears. You can't roll it over to next year. What to do? If you have got money in a normal savings account earning interest, move it into cash ISA before April 5th. You will shelter that interest from income tax going forward. If you are comfortable investing, consider a stocks and shares ISA. Any gains or dividends inside are tax-free. Married or in a civil partnership, you each get £20,000. So that's £40,000 combined you could be sheltering this year. And here's something worth knowing for 2025-2026 specifically. This is one of the last tax years where you can put full £20,000 into cash ISA. That limit is set to drop in future years. So this year matters more than most. Even if you can't max it out, put in whatever you can. The allowance doesn't care how much you earn, it's available to everyone. I will put a link in the description that explains all the type of ISAs available to you. Number 2. Top up your pensions. This is genuinely free money and most people are leaving it on the table. When you contribute to a pension, the government adds tax relief on top. So if you are a basic rate taxpayer and you put in £800, the government adds £200, bringing your total contribution to £1,000. That's an instant 25% return before your money has even been invested. Higher rate taxpayer, you can claim even more back through your self-assessment. What to do? If you are employed and have a workplace pension, check if you are contributing enough to get your employer's full match. If not, you are turning down part of your salary. If you are self-employed or have a personal pension, you can contribute up to £60,000 this tax year or 100% of your earnings, whichever is lower. Haven't used your full allowance in the last few years? There is something called carry forward that lets you bring unused allowance from previous 3 tax years. Check with your pension provider. The pension annual allowance resets on April 6th. Any unused allowance from 2025-2026 that you could have carried forward starts ticking down after that. Number 3. Use your capital gains allowance. This one's quick but easy to miss. If you hold any investments outside an ISA, shares, funds, crypto, whatever, you have a capital gains tax allowance of £3,000 this year. That means you can sell assets up to £3,000 worth of gains and pay 0 tax on them. But again, if you don't use it by April 5th, it's gone. What to do? Review your investments outside of ISAs. If any are sitting on gains, consider selling enough to use up your £3,000 allowance. You can even reinvest immediately into an ISA to shelter future gains. Couples can use this together. That's £6,000 combined you could potentially realize tax-free before April 5th. Quick word of warning, I'm not a financial advisor and everyone's situation is different. If you are unsure whether this applies to you, speak to someone qualified. But the principle is simple, don't waste an allowance you are already entitled to. So to quickly recap, before April 5th, max out your ISA, up to £20,000 per person, tax-free forever. Top up your pension. The government literally adds money on top. Use your £3,000 capital gains allowance if you have investments outside an ISA. None of this is complicated. You don't need a lot of money to start. You just need to take action before the deadline. Because after midnight on April 5th, these allowances reset and you can't get them back. If this was useful, hit the like button. It really does help the channel when you are just starting out. Subscribe if you want more straightforward money content and drop a question in the comments if there is something I didn't cover. Thanks for watching and I will see you in the next one.